and be talking a little bit about currency, just like I did last week. And if I sound a little better, it's because I am. Thank you guys so much for your well wishes. I didn't have a voice and I was pretty sick. I had a fever, but we're all good now. Knock on wood. Um, but let's hop into the charts, right? We're gonna go through some of the positions we talked about last week rather, and then talk about where they are in comparison, if anything has changed. So let's just hop right into it, shall we? And start with the euro US dollar, still trading in that nice inverse head and shoulders. So far, right, this right shoulder is holding because this right shoulder hasn't finished completing. It's not really an issue. It's not really an issue if it goes lower, right? Let's say for whatever reason, this right shoulder got lower and price actually got all the way down here. It's fine. This is still a valid inverse head and shoulders pattern. The only way it becomes invalidated is if the right shoulder ever gets above the head, right? Just as long as it doesn't go above the head right down here. So realistically, this could play out for a while. If we take a look at this left shoulder, for example, this only took about 8 days to fully form that left shoulder. For the head to fully form, it took a little bit longer. It took about 48 trading days to form. And right now we're sitting at 7 days until like from the formation. And you know, realistically, this could continue to go on for 20, 30 or so days. Right? We just don't know. However, we do have the neckline, we have the pattern, you have the nice measured move, and the further away you get down, right on this neckline, the more that breakout level changes, right? So realistically, you could go here or you could move up. It just depends on where it ends up breaking this neckline, right? So it's important to note that, you know, when we have an established pattern like this, where is the level that we can find out if it's invalidated? In this case, the head would have to drop below, you know, 1.14. And for it to start to play out, it would have to break above this neckline, wherever it is, when it ultimately breaks. But that's what I'm watching. So nothing really different on the euro as of now. On the next chart, the Japanese yen US dollar continues to respect this parallel, or this rather this the lower end of this downsloping or upsloping trend line rather. There's a nice upsloping trend line. Here you see that it's kind of teased it a couple times. We can even adjust this ever so slightly so the pivots kind of line up perfectly. So far this trend line is holding 1, 2, 3 hits so far, right? And on the third hit of these trend lines, you're expecting a bounce or a move higher, right? Or a move higher. So if this is something that you're interested in and or looking to trade, the way that personally I would go about doing it is looking for, okay, let's say I wanted to short this. Where could I short it? Well, I'll give you a couple places. One, you could short up here at the top of this upsloping parallel channel. Number two, you could potentially short at the midline of that same channel that we've been talking about. It's on your screen. And then if we go slightly lower, you can short on the break of this, the lower part of this channel rather, or trend line, right? Or I'll give you another fourth option. Let's say it breaks down and retraces. You could reshort on the retrace to the lower end of this parallel channel slash upsloping trend line and wait for a move higher, right? Waiting for a move higher. Next one, and something important to note about this kind of bear flag, the yen has remained pretty weak, covering around here, despite warnings from their finance minister Satsuki Katayama, right? The next one I want to talk about is the GBP USD, and we'll go back to the DXY afterwards. The Great British Pound, still, guys, still, and this, you can see that this trend line is providing some good resistance, at least for now. What did I just mention about the third hit? 1, hit the trend line again, and then 2, 3, third time pullback. So the next time it pushes through, you could play it for a breakout here on the GBP USD, entering on the break or on a retrace, similarly to what I talked about, right? The pair is somewhere around 13 1.35 ish, but the third hit did play out just like I said, right? I'm not trying to toot my own horn, but great pullback from that third hit, about almost a 1% pullback. Now that third hit has pulled back, we're looking for a move up and a breakout into the next the next level. Let's say we break out. Where are the levels of resistance? First level of resistance I'd be targeting is around the 137 region, right, for resistance on this chart. And then, of course, up here around 138.6-ish. All right. And the final chart I'm going to cover is the DXY, the dollar kind of index. And on the DXY, I mean, we were potentially looking to try and break past this $100 level, but we've begun to put in a base. You saw yesterday we got as high as 99.3, never quite got past that 99.5 gap fill. That was a clear level of resistance, right? Pulled back just shy of it, but broke a clear upsloping trend line, which is bearish. Right? The DXY, since our last video, has slipped a little bit, kind of trading around here. So now, instead of being just below 100, the conversation is now about whether 98 to 98.5 is that the floor, or if we're heading towards, another gap fill should it continue a bit lower. I believe there's a gap fill here around 98 exactly. Pivot low down here at 97.6. So plenty of levels to watch here on the DXY, right? But the question is the dollar bottoming? Is it set up a base, or is this a sign of things to come? And could we expect a further fall, say to the 95.8, right, level? Only time will tell on this chart of DXY. With that being said, guys, that's all I have